What's up everybody, welcome to Money Management channel. My name is Andrei and today I'm gonna be doing analysis on First Republic Bank.
I got the cash in the bag, stadium packed, born a rock star in this life, gonna live it up.
And in today's video, first of all, I will show you where we are on the price chart and how we get there. Then I will continue with the fundamental news that probably will drive the price of this asset higher. And at the end of this video, I will share my thoughts and my technical analysis. And I will show you even two more potential trades from the banking sector that might be more lucrative and less risky for you. So let's start with the price chart. I have to say that this asset lost since March the 6th about 80%, more than 80% of its value. And definitely the main catalyst of this sell-off was the potential bankruptcy of Silicon Valley Bank and the liquidity crisis that the majority of regional banks faced recently. And First Republic Bank is another bank that probably might be at the edge of bankruptcy, but right now we have quite good news directly related to its customers. And I have to say that from the technical standpoint, when we can see this type of price action with a lot of gaps, definitely we have to see the bounce to the upside. And this bounce, let me zoom out a little bit. As you can see, this asset is at extremely low price point at roughly $23 that it hadn't since basically back in 2011. And definitely this is a potential opportunity, but we have a lot of risks directly related with this asset. So, and let me show you first of all one of the catalysts. Right here on the Stock Tweets community, we can find the FRC ticker symbol on the second place, and it is on the watchers section on the second place. On the most active section, it is on the third place. This means this asset has quite good attention from the retail community, and definitely we might see the higher volatility of this asset because of this. On top of that, let me show you that we have this plan of rescue the First Republic Bank from the authorities, and let me quote you this news in detail. Inside the $30 billion rescue of First Republic Bank, an 11-bank plan to save First Republic began with the brainstorming session between JP Morgan CEO Jamie Dimon, Fed Chair Jerome Powell, and Treasury Secretary Janet Yellen. And let me quote you this. The $30 billion rescue of First Republic Bank began with a series of phone calls Tuesday between JP Morgan Chase CEO Jamie Dimon, Federal Reserve Chair Jerome Powell, and Treasury Secretary Janet Yellen. Dimon was in Washington according to a person familiar with the events, and he wanted to discuss some issues that concerned bank capital. The subject soon turned to the fate of the nation's 14th largest bank. So, the CEO of the nation's biggest bank, the Fed Chair and the Treasury Secretary started brainstorming according to people familiar with the discussions, with input from another powerful regulator, Federal Deposit Insurance Corporation Chair Martin Grunberg. Their idea, JP Morgan could give First Republic some deposits. And definitely this decision to give First Republic Bank about $30 billion cash might give him an opportunity to be saved by the major banks, and this bank can avoid its bankruptcy because of the liquidity crisis. On top of that, other minor banks also added about $20 billion, and these banks are following US Bancorp, Truist Financial, PNC, State Street Bank, and Bank of New York Mellon, and each agreed to deposits of $1 billion. I have to say that it is extremely important that these banks are able to do this, to give this help to smaller banks. And I have to say that in general, let me show you this article that was published on Financial Times, and it's titled White House pressed to expand deposit guarantee to steady banks. Regulators' intervention in crisis has so far failed to calm nerves. And let me quote you this. The Biden administration is under mounting pressure to call for an expansion of the federal guarantee on bank deposits to shore up confidence in financial system and prevent further distress among US regional banks. The Federal Deposit Insurance Corporation, which is funded by banks, guarantees deposits up to $250,000. But a growing chorus of influential bipartisan lawmakers and banking industry lobbyists have been pushing for that limit to be increased or suspended. I think that lifting the cap is a good move. Elizabeth Warren, the Democratic senator from Massachusetts, told CBS on Sunday. Is it $2 million? Is it $5 million? Is it $10 million? Small businesses need to be able to count on getting their money to make payroll, to pay the utility bills. Non-profits need to be able to do that, she added. The Biden administration is being forced to consider additional measures to protect the banks after the actions it took last week, including guaranteeing all deposit at Silicon Valley Bank and Signature Bank, and a Wall Street-led deposit infusion into First Republic Bank failed to reassure investors on Friday. And definitely it brings a lot of fear on the market, especially on the banking sector of the market, but also it brings a lot of opportunities. And if you take a look, if you take a closer look on these banks are pretty much top 10 or top 8 banks, the biggest banks in the United States of America. And I have to say that because of this, these banks are pretty much on a safer territory, because the customers of smaller regional banks will pull their money out of regional banks and bring it to the biggest national banks. And that is why I have to say that remember these banks. These banks might also be an extremely lucrative opportunity for you for the short-term perspective. And let me show you the price action of First Republic Bank. But before we dive deep right here, please subscribe to my channel, hit notification bell and hit the like button. This helps me a lot. So let's switch to hourly time frame and let me show you this price action in details. As you can see, we have the range of about $19.6 as the range of support, but on the other hand we have this type of price action that is forming the descending triangle, and usually this triangle breaks to the downside. And let me show you that we have this weird activity on the RSI, and I have to say that the higher these tops are, the more probable that it will break to the downside, because it implies the hidden bearish divergence. This is the pattern when we can see higher highs on RSI with the lower highs on the price action. And this implies more bearish pressure on this asset, and as you can see we are retesting this range of support for the third time, and this means we have much more chances to hit lower price targets, and somewhere lower probably I will do another update and I will show you the levels where we might catch this bounce. But right now let me show you two banks. It is a US Bancorp, and it also lost from its swing high right here about 33% of its value. And the second one is Truist Financial. This bank lost from its swing high about 42%. And right here, as you can see, we have proper bullish divergence. It has a higher lows on our side, especially on a 4 hours time frame. As you can see, higher lows on our side with the lower lows on the price action. And in my opinion, this upcoming week will bring another bearish pressure to this price action, and we will hit some lower targets. But definitely we have an amazing opportunity to catch this movement, and with this price action we might have about 19% of upside potential in a short-term perspective with this bank. And on US Bancorp we might have, let me show it to you, about 11.5 to maybe 12% in the short-term perspective for this bank. So definitely it might be quite a lucrative trades, but keep in mind that this sector is extremely volatile right now, and you have to put your tight stop loss right below the previous bottoms. So I think from the technical standpoint that's it for now. If you like my video, please hit the like button and subscribe to my channel with notification bell, and see you guys and girls next time. Bye!
I got the cash in the bag, stay